I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're speaking with Ross Kay from Ross Kay Realty Consultants. Ross, welcome back to the show.
Thanks a lot, Jim, and thanks for having me back.
Premier Christy Clark of BC and Prime Minister Justin Trudeau sat down last week to talk about sky-high real estate prices in Vancouver and Toronto and what the government can do about it. What can the government do about it, and what should they have done about it?
Well, it's too late right now to recover from the current market conditions. So what I mean by that is that any movement at all by the government to accelerate a slowdown is simply going to have the same effect as waiting for it to happen. The government years ago should have taken proactive measures. Now, this is the federal government, Jim, not the provincial government. The federal government should have changed the acceptable GDS gross debt service ratios that the banks were allowed to approve for mortgages. What I mean by that is that the GDS ratios that are used today, gross debt service ratios, take what your income is. So let's say you earn $100,000 before tax, and if you have a fantastic credit score and you've been really good with your money, the bank will allow you to spend $39,000 a year on your mortgage payments, your property taxes, and a little bit of your heating. So as we know, when interest rates are low, people can afford to buy a lot larger home because the carrying charges are lower. What happens when you can afford to buy a larger home is you go out and you buy a larger home because the payment on it was the same as it would have been on a smaller home when the interest rates were higher. What the banks don't include in their GDS ratios or their TDS ratios, which is total debt service, which basically they just add in your credit card debt, they never include what it costs to maintain, renovate, and replace items in your home. That component is not even included. Since the replacement, maintenance, and renovation cost is higher with a larger, more expensive home, as the interest rates dropped, people were buying larger and larger homes, but what they're not thinking about is how much it costs to actually own that larger home. So in other words, what would have cost you a $4,000 roof to put on your house may now cost you $6,000 or $7,000. Your income is not adjusted for that. GDS ratios were set up in the 1980s and 90s when interest rates were very high. You know, in 1990, just before the last house price correction happened in Canada, we're hovering around 10% interest rates. Okay, at 10% interest rates on a 32, 34, 36, 39% GDS, you could only buy a relatively small home. But when interest rates drop down to 2.5% or 3%, you can buy a lot larger home. So that's where the government could have taken proactive steps. The GDS should have always been a variable calculation. In other words, it should have been tied directly to what the interest rates were. So when interest rates began to drop below 10%, the GDS ratio should have dropped as well. And that would have stopped people from overhoming. buying too much home for what they really can afford. That's the move the government should have made. What the government did instead is they have tried to approach this topic by raising down payments. So Flaherty moved down payments. He shortened the amortization period for first-time buyers. They raised the down payments. Now have gone back, are gradually have gone back up. But all that does is that takes first-time buyers out of the market. It takes first-time buyers out of the sales mix. So obviously, if you have fewer first-time buyers in your sales mix, the natural thing that happens is the average selling price increases. So what the government has effectively done, they have raised the average selling prices themselves by removing first-time buyers from the market. That's because they had bad housing intelligence from the realtors, because realtors would do nothing that would have people be more responsible in their buying habits with houses. Heaven forbid that happens. They wouldn't have to be able to flip these houses 5 and 6 times like they are in Vancouver. The banks wouldn't be happy because all of a sudden they'd have to be far more prudent with their lending strategies. And CMHC would not be happy because their profit margins would drop. So the poor consumer is left out in the cold with all of this. The Minister of Finance has never received any logical housing intelligence that he can sit back and make a rational decision about. The the Superintendent of Financial Services, he has warned the banks about people overbuying homes. They just don't listen to him because they don't have to. They don't have to because the government hasn't changed the legislation. So Mr. Trudeau can go out there, Mr. Morneau can go out there, they can talk to Ms. Clark, they can talk all they want. It's too late. The damage has been done. The housing bubble is as large and still growing. It's still growing right now, and it will grow until it pops. The housing bubble is going to pop in Vancouver as it is across Canada nationwide.
And we've seen markets that other people said were, quote, bulletproof, see declines now. London is seeing people having trouble selling their condos. Miami, people are having trouble selling their condos. San Francisco is kind of on the edge, but if you think Vancouver is bad, San Francisco, for example, a 1-bedroom apartment is renting for $5,000 a month. So you can see the pressure in real estate there as well. How long can these bubbles be sustained?
Never. They can only be. It's really now. Let's talk about Vancouver. Let's talk about BC right now as an entity on its own. So we're going to talk about the BC housing bubble. Okay. BC's housing bubble. In other words, your continued house price gains are solely reliant on the house price gains themselves. What that means is that if you don't have a 2% house price gain in a month later, that house price gain cannot take place. People are already financed to the hilt who own properties in British Columbia. There is no longer any room for financing to raise housing prices. The only thing that can help housing prices grow are housing prices themselves. It's like it's a pyramid effect. It really is. All housing markets reach a point where they're a pyramid scheme. In other words, you can only pull out money if someone else is participating in the pyramid itself to keep it going. Now, in Ontario, there still is a little bit of mortgage money that could be added to the market that could propel that market forward a little bit. But in British Columbia, there is none. If house prices do not increase in a given month, future increases are not supported by adding more mortgage debt. So this is what happens when one of the ways that a house price bubble pops. When I've used this analogy in seminars before. So a housing market is like a fire. Your first-time buyers are your kindling. So you start out with basically nothing. The housing market is just sitting there. It's an open fire pit. Someone takes a few first-time buyers, kindling, it lights it, and that gets the fire going. As those first-time buyers are active and they're buying houses, that allows the fire to get a little bit bigger because they light the bigger pieces of the stick in the market, in the fire pit. They allow existing homeowners to move out of their existing home and buy their next home. Then as the fire gets a little bit hotter, the next series of sales takes place. As long as the first-time buyers are still there fueling the fire by putting that kindling in the bottom, then the market will keep going. Sooner or later, there is no more kindling left. And you can't add enough kindling into the fire to keep the fire getting bigger and bigger and bigger. And a housing bubble is either all housing markets are always in a bubble, and the bubble is either inflating or it's deflating. So it's just like a fire. You can keep adding wood to the fire, and the fire keeps getting bigger and bigger and bigger. The second you stop adding wood, that fire will start to extinguish itself. What's unique in British Columbia right now is that the entire market is reliant on house price gains. So there are no overriding fundamentals that are supporting the market in BC right now. You're watching as Vancouver, they claim, has slowed down a little bit. But what nobody's telling the BC residents is that Fraser Valley has gotten busier. That's because the Vancouver-Fraser Valley is still one housing market. Yes, Vancouver will get busier quicker. They will see bigger house price gains, and it will take longer for the suburbs to catch up steam. I mean, even Okanagan mainland, they have been a little bit busier than normal because the flow over from Vancouver flows throughout the entire province. What you have a problem now is that the fire now is no longer in Vancouver, it's now in the suburbs. That means it's already starting to extinguish. Prices are too high for any new first-time buyers to get into the market. There is not a whole bunch of new inventory being built that it would accommodate those first buyers. In Ontario, there is a whole bunch of new inventory that's built, and that has the opposite effect in Ontario, because those first-time buyers now are not entering the resale market. They're more heavily concentrating in the new home market. That causes a housing bubble to deflate and pop, because unless first-time buyers are entering the resale market dies, because those trade-up purchases can't take place. There's nobody to buy the first step in the pyramid. There's no first-time buyers buying that first home, which allows the owner of that first home to buy their second, the owner of the second to buy their third, the third to buy the fourth to buy their fifth. The federal government, the Minister of Finance, your Christy Clark, the Mayor of Vancouver, none of these people know that right now in British Columbia, people are moving every 6.4 years. When people are moving every 6.4 years, they haven't paid down their mortgage debt. So the only way that they can move is if their own house is appreciated enough in value. In Quebec, people are staying in their houses 15 years. So they don't need the house price gain on prices alone. They're paying down their mortgage debt, so that allows them to move to their next house. But if any of your listeners go to the CMHC website, if they go to any housing expert's website anywhere in Canada, other than Ross K Realty Consultants, you will not find anywhere how many years the person is staying in their house before they're moving. This most basic of real estate measure is something the government has never been supplied by anybody. The reason they haven't been supplied it is because organized real estate years ago said we wouldn't release that information. And in the following 25 years, the incompetence of the real estate sector, real estate agents, realtors, the Canadian Real Estate Association is, they don't even know that that measure exists. So when you're talking about a housing bubble, Jim, housing bubbles all pop for different reasons. There's many different reasons that they can pop. They all pop. It never goes on forever. We need a correction simply to let the market recharge itself. I'm sorry, but there is a period in all housing markets in free democracies where the market has to reset. And that's what's going on right now. The euphoria that's gone on, even if Chinese buyers keep buying ultra-luxury class homes in Vancouver, it's not going to stop what's happened in the rest of the province from cooling off. And the very first month where house price gains slow or stop is the month that the Vancouver real estate market is finished and the bubble will start to deflate.
We'll have more with Ross Kay right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ross Kay. Ross, the Canadian Real Estate Association and I think the Bank of Canada did some analysis, and they tell us that if prices in Vancouver drop, and of course we know they will at some point, if they drop, for example, 18%, 13% of homeowners would be underwater and 4% would be in severe financial distress. If house prices went down 25%, 25% of them would be underwater. What does underwater mean, and what does severe financial distress mean, and do these numbers mean anything?
So I'm going to start with your last question. These numbers, the way they've been presented by the Bank of Canada, mean nothing. The Bank of Canada is quoting the average selling price. What I can tell you is this, as I've said on this station before. Housing prices are dictated by the sales mix. And what I mean by that is if first-time buyers started buying into the market, your average selling price is going to drop. As first-time buyers leave the market, the average selling price increases. It's just basic math. Any elementary student who knows what an average is could tell you that. So when the government is quoting numbers about a 25 or a 10, 15, 25% correction nationally, they're talking about the average selling price. Well, I can assure you, Jim, that Quebec, which contains about 25% of the housing stock in the nation, their housing prices are not going to correct 25% because they haven't gone up enough to correct 25%. What we're talking about here are two markets. I mean, we already know that Calgary, your listeners here who hear about these 3% house price decreases in Calgary. In other words, the Calgary Real Estate Board claims it's a 3% house price decrease. Everything's not as bad as what everybody says. That's just hogwash. The average person has lost 17% of their home's value. All that's happening is you're just buying more house for the money. So you're still going to spend your $500,000, except now you're getting a house that's worth 17% more than what it was worth last year. You're still spending $500,000. $500,000 sales, no matter what people are buying, still averages $500,000. So when the government was commenting about people being underwater, they do not even understand themselves what they're talking about. And this is how scary this situation is right now. When the Bank of Canada does not understand that average selling price is a fictitious number that measures how much the buyers are willing to pay and not how much the average house is worth, you have a major, major problem. Canada's sales mix right now at the month of May, British Columbia is accounting for 23% of Canada's average selling price. 23%. In 2013, it only accounted for 13%. So what happens if instead of having being on pace to do 113,000 sales in the year, it drops back to the 70,000 that it was back in 2013? All of a sudden, the national average selling price drops 12% overnight. Overnight, even though the house's prices didn't change at all. So when a government comes out and makes commentary like this, it's just another example about economists, because these are all economists with the Bank of Canada. They have no formal training on how housing markets function. They do not understand even what the average selling price means. That means Greg Klump, the chief economist for the Canadian Real Estate Association, does not even know how the average selling price changes. He is believing some crazy comments that were invented 30 years ago that were meant to confuse economists instead of explaining to them how housing markets function. So when the bank says that 13% of people would be underwater, there haven't been enough houses sell for more than 13% that would allow those people to be underwater. So it doesn't make any common sense. Someone can get out a calculator, bang in the numbers, and it doesn't make any sense. Now, that said, Vancouver, you can take a 30% house price correction, full 30%, and that only puts you back to prices not even a year ago. Let that sink in for a moment. The benchmark prices quoted by the real estate boards in Greater Vancouver have increased over 40% in 1 year, one 12-month period. Is someone going to try to tell me that the housing prices cannot simply flip back to what they were a year ago, 1 year ago? We have what's called this calculation. It's called the illusion of equity. So there is this illusion, this false belief that houses have increased 40% in 1 year. Okay, let's say that I owned $1 million house in a part of Vancouver. It's increased 40% in the last year. It is now fair and square. I could put it on the market for $1.4 million. I have made $400,000 in 1 year. Okay, as a guy who made $400,000, I can actually take a $200,000 hit to sell my house, and I still made $200,000. In other words, I still made a 20% profit in 1 year. What everybody across Canada will hear is there was a 20% house price correction. And that's where the risk is, Jim. The risk is all of these false opinions of pricing have a self-fulfilling effect when they come out into the market, because next thing that happens is panic sets in. The people who have made big house price gains, they can afford to sell at a little bit lower and still make historical profits. The people who got into the market late, they're the ones who pay the price. Our wealthy homeowner program, which allows our clients, they can time the market, their own house and their investment. So that's the wealthyhomeowner.ca. We have two guys who bought properties in a North Delta last year on our intelligence. So we figured at that time house prices were on pace to do about a 35% gain in the next 12 months. They went out and bought on spec a property, the two of them, with $100,000 each. Those people have turned $100,000 into $300,000. They can liquidate that asset today and still, with all their costs covered, pull out a $200,000 profit. That doesn't make any logical sense. And that's why the house price bubble and the comments that the Bank of Canada issued are simply absurd nonsense.
Ross, thank you so much for chatting with us. I know it's such a complicated subject, we could probably go on for hours, but of course we have other shows to do, and we will cover some of these other topics.
Thanks a lot, Jim, and you're always welcome to reach out, and I'm glad to speak with you again.
My guest has been Ross Kay from Ross Kay Realty Consultants. His website's rosskay.com, and for you homeowners, check out thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Our popular YouTube channel is Talk Digital Network. You can also find us on Twitter at Talk Digital Net. Questions for the show can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.